Amy here. Today I'm going to talk about paying taxes on virtual currency income. So, of course, we know that virtual currency income is a little unpredictable throughout the year. It's hard to know what your gains are going to look like until you actually have them. So I am often asked, gosh, I didn't pay tax on all this. Am I in trouble? Well, you're not in trouble to the extent that they're going to come and knock on your door and haul you off to jail. No. But you may be paying an underpayment penalty. And the reason for that is here in America, we have what's called a pay-as-you-go tax system. What that means is that the IRS wants to get their money right around the same time that you're getting your money. The way this is accomplished for most people is W-2 withholding or sending in quarterly estimates if you're self-employed. When you have virtual currency income, as I say, it's a little erratic. How do you know to pay tax on that as you're earning it? There's a couple of ways that you can make sure that you're at least not charged a penalty, and that's what I'm going to talk about today. Here's the safe harbor rule to avoid paying an underpayment penalty. Look at the second page of your 1040 where it says this is your total tax. So for example, on the 2016 1040, it's line 63. If you pay in at least this amount throughout the year, either through W-2 withholding for you or your spouse, or in quarterly estimates paid in regularly, then you're safe. Now, there is one exception. If your adjusted gross income is more than $150,000 for married people, $75,000 for everybody else, it has to be 110% of that number, not 100%. And the adjusted gross income is the number on the very top of the second page of the 1040. So here's a Form 1040 showing adjusted gross income, here at the top of the page, of $85,000 for a married couple. When we look at line 63, we see the total tax is $6,624. So as long as this couple has withholding or estimated tax payments of $6,624 or more, they won't pay an underpayment penalty. Now here's a Form 1040 showing adjusted gross income of over $167,000 for a married couple. When we look on line 63, we see the total tax is $28,085. So this couple has to actually have withholding of 110% of this amount in order to avoid an underpayment penalty. It's a little more complex when you are making quarterly payments, those 1040-ES forms, rather than withholding. The reason it's a little more complex is that the IRS can tell if you didn't pay in that money evenly. They can tell if you said, oh, I'm not going to send in very much the first and second quarters, and I'm going to send a whole bunch in third and fourth quarters. It's actually possible to get a refund and still pay an underpayment penalty because you paid it all in later quarters, not earlier quarters. This is a little too complicated for a quick YouTube video, so I'm going to suggest that you talk to your very own tax guru about that. Thanks. Don't forget that I have a book that can help you understand your virtual currency tax obligations. It's called Virtual Tax, the Taxation of Virtual Currency. It's available on Amazon and on Barnes & Noble. Now for the fine print, these are general tax principles. Talk to your tax preparer before applying any of these principles to your own tax return. I am not responsible for any tax return that I have not prepared. Hey, if this presentation was helpful for you, hit like. If not, tell me what you didn't like so that I can do better. Share this with your friends who could use the information. Thanks for listening.